Why you need to get and keep a good credit score. Your credit or FICO score is a tool lenders use to quickly determine how likely you'll be to pay back your loan. It impacts the amount of credit you can qualify for and your interest rate. You could be turned down because a low FICO score indicates you may not be able to pay down debt or pay your bills on time. A FICO score under 580 is considered poor, while a score over 800 is exceptional. The national average, 706, is a good score. People with a good or great credit score typically end up paying much less interest on their loans than people with a bad credit score. Of course, people with bad credit scores usually can't afford to spend more money. Let's say you want to buy a new car and you need to take out an $18,000 loan over 48 months. If your credit score is 550, your interest rate may be around 17%, with a monthly payment of about $520. Over the life of that loan, you'd pay almost $7,000 in interest. If your credit score is average, around 706, your interest rate may be around 6%, with a monthly payment of about $423. You'd pay only about $2,300 in interest total. And if your credit score is great, over 800, your interest rate may be around 4.7%, with a monthly payment of about $412, for a total of around $1,770 in interest paid. A bad credit score versus a good one will cost you an extra $108 per month in this scenario. That's an extra $5,230 over 4 years. A bad credit score also may cause you to have higher interest rates on your credit cards, home mortgage, and car insurance. And you may be required to pay a deposit on utilities such as your smartphone, cable, internet service, and electricity. A bad credit score also can make it difficult to even get the things you want, such as a credit card, a cell phone, a car, or even a new job or a new apartment. You could get turned down because the lender, landlord, or business fears you won't be able to meet your financial obligations in a timely manner. Clearly, you can't afford to have a bad credit score. So, how can you improve yours? Here are a few things you can do. Check and monitor your FICO score regularly. Get your free annual credit report so you can see if you need to take action, such as closing unused accounts or paying off delinquent ones. Pay your bills on time, because recent delinquencies reduce your score. Keep a few older accounts open to demonstrate your credit worthiness. Don't max out your available credit limit. A good credit utilization rate also shows your credit worthiness. Work with a credit counselor if your financial situation is in need of an overhaul. FICO scores change frequently and depend a lot on your recent credit activity. That's good, because it means you can take action now and see improvements to your credit score relatively soon. You can find more personal finance information for NEA members at neamb.com/personal-finance.